Okay, so lessons learned. I've been lucky to work with Bill O'Neill, and along the way, I've met some other people. Dragonflies and hummingbirds are very inspirational to me, so that's the reason I have them up there. Anything I say tonight is, just for learning purposes only. I think you guys know that I'm not going to beat this one to death here, but you just know it's educational material. So Bill wrote the book that everyone should read, which is How to Make Money in Stocks. And I had the nerve, and I'm not sure why he gave me the confidence. I really don't know why. I've had just such guts to say, can I write a book about the success stories with IBD, the people that have used it? And he said, yeah, go do it. And I think I was kind of surprised that he said yes, but I was very lucky, very, very lucky to be able to do that. I was lucky also to work with Matt, is just a great guy. And we did the investing show for, oh goodness, I don't remember how many shows we've done, years of shows. It was a radio show first, and then it was a video show, and learned a lot just by doing that. These podcasts, so the radio show, are available. So if you have your phone and you want to listen to them, there's 250 or more shows that we've done, and they're all under this, it's a podcast addict here. They're in a collection. You can go look at them and listen to them. And as I say, we put a lot of effort into them. And Bill helped us when we were starting out with the show. I just applaud, excuse me, all of the meetup groups out there. They're doing incredible work. Take a picture of this and take a picture of the next couple slides. These are people all over the country doing great work. And I really need to add Cookie to this list. But, we have Washington, Petaluma, California, San Francisco. You can just see Delaware, Dallas, Santa Monica. There's the Boston MIT group. Greg is fantastic from South Carolina, and Steve Sweats helps a lot of the different groups. So here's where you want to take your picture. Here's the ones that are doing really active Zoom meetings. They're free of charge, incredible learning. I can't say enough about all these groups.
Many of those people are attending today.
Good. And here's another list. And if I've forgotten someone, I'm so sorry. If you guys need to email me, it's amy.smith@investors.com. Cookie asked me to tell you, how would you sign up for the IBD market prep and the tech newsletters? You just do a Google search. Just Google IBD market prep, IBD tech newsletters, and you can get one delivered into your email every morning. Get a little bit of the prep, what's happening in the market early, the tech reports and the stocks that we cover. IBD Live, also, this is our latest thing. You can, these guys all chat in the morning, about 5 or 6 of them, a couple minutes before the market opens, and then they go for an hour, hour and a half, sometimes 2 hours. If you do a Google search, IBD Live, it'll pop right up if you're interested in that. And then Cookie wanted me to show you the how to invest section, and it's just a whole bunch of videos, articles, you name it. And if you take a picture of this URL, you can get there. And I just wanted to say thanks for being here today. I always appreciate being out with the meetup groups. I sure wish I could be with you guys in person, but maybe soon, maybe next year, we'll see, hopefully. You have to have patience. I guess I've learned through this career here. We were upstairs trying to film, and this is what our faces looked like. And we could not get this off of here. Someone had come into the studio, switched around some buttons, and we were there till about 1 o'clock in the morning trying to get the show done. So, but we had a technician with us. We had a guy that knows how to operate all these machines, and he couldn't figure it out. So sometimes in life, you have to have a lot of patience. I was so lucky. My 2 mentors here is Fred Richards on the left, Bill O'Neill on the right. I was so lucky to learn from these 2 giants. Fred Richards has talked to the AAII group in Detroit on multiple occasions. I'm sure many of you remember him. Yeah, I'm sure that you do. And Bill O'Neill, of course, is the founder of IBD. They grew up across the street from each other in Dallas, Texas, from high school on, I think was about the time. So Bill O'Neill was Fred's older brother in the fraternity, and Fred took me when I was down in Dallas to see their houses. And their houses were little ranch houses like this. They were right across the street from each other. And Bill was playing the trumpet really loud one night. It was late. And Fred went over to say, hey, could you stop playing your trumpet? It's kind of loud. And they chuckled and they laughed and they got along really well. Good friends ever since. I was lucky with my timing, really lucky. The differences between Fred and Bill. Now, don't let this confuse you here. Fred has done a lot of study in the market. I mean, he's done much studying, but he tends to keep it simple. These are Bill's notes on one chart. Look at the analysis. I mean, it's just everywhere. There's notes everywhere. But I use a hybrid of the two, and Fred is a big fan of Can Slim. He's got a couple of added parameters. So anyway, I was lucky. I learned from Fred. He started coming out to California to give various workshops in 2008. So I learned a lot about economic conditions and a lot of things from him. And then I started working at IBD just at the beginning of 2009 when we had a new bull market. So very lucky timing on my part. Fred would have these all-day workshops in the Marina del Rey, and they were really good. It was lots of fun. He'd serve lunch and do a lot of learning. So what Bill and Fred are both doing is they're hunting for the elephants. Now, their approach was different. They both made a lot of money. So my question is, are you elephant hunting? Now, the early elephants, as far as Fred's, his early winners, can you imagine, remember when we used to say, of course, this is about the time I was born, but the invention of the Xerox machine? Wow. I mean, that was amazing. United Carbon was an oil company located in Dallas, and Fred is from Dallas, so he knew a lot about the company and was able to capitalize there. Texas Instruments, we know what was going on with McDonald's in 1963. Well, we had the very first Ronald McDonald. We had the very first golden arches, so that anywhere when you were driving, you could see the golden arches. It's a brilliant marketing strategy. We have the interstate continental highway expansion all across the US. And as people are driving, of course, they stopped at the golden arches and ate. If you haven't seen the Netflix story, it's the Ray Kroc story with Michael Keaton. It's very interesting. Ray Kroc, not necessarily the nicest guy in the world. So the company, does it change the world? Does the company have a competitive advantage? Did Zoom? Yes. Are the sales expanding? How about Peloton? Now I'm talking about the winners from the COVID. You know, we've had a sell-off the last couple of days, but I'm just saying these were the COVID winners. Is their net cash flow positive? Is the management ethical? Would you have them in your home? Do you trust the accountants? Sometimes we don't trust the Chinese accounting. Are you comfortable owning the stock? So Fred's been in the market for over 60 years, and here's a few of his big winners, and some of these big winners were the same ones that Bill was in. You're looking for those big earnings and sales, something that changes the way we live. At Costco, Bill went down and saw Price Club in San Diego, and he couldn't believe it. People were walking out with crates of, of goods and groceries and stuff. And of course, Price Club became Costco. So they made money. MasterCard, Bill's been in that, Fred's been in that. So the way that they invest is slightly different. Bill will hold maybe a little bit, not quite as long as what Fred does sometimes. Bill's been nominated for a Lifetime Achievement Award through Benzinga. I haven't seen if the results have come out yet, but I voted for him as many times as I was allowed to. So unfortunately, voting is closed. So I hope that he does win that. Strategic investing. You can still go to this website. He used to write a nightly newsletter, but you can still go to stratinv.net, strategic investing. And he's taught people all over the globe. The Halkin Group out of London used to send out his nightly musings. And one of his great strengths was to look at the US and global economies. But the thing that's really nice about Bill and Fred, and that's the reason I have such admiration for them, is they just wanted to help other investors. And they both gave so much of their time for free. This is a Fred Richards screen in MarketSmith. You can take a picture of it if you want to. Now you can see that this is the creme de la creme de la creme. I mean, this is just going to bring up the very top stocks, and it may bring them up after they've started to move. But you can learn a lot by running this screen. Earnings per share, greater than 95, relative price strength, greater than 95, only an A in accumulation distribution. the current price, and there you go. There's only one stock on it right now, so that tells you what kind of market we're in. This screen should have several names on it in a healthy market. Right now, there's just one. I recommend you take a look at this YouTube video of Bill O'Neill, market wizard William O'Neill, on CanSim and his 60-year career. If you just do a Google search into YouTube, you'll find it. It's wonderful. And you'll get to hear a lot of great little tidbits from Bill. This still exists from the radio show. We did a 3-part interview with Bill. It's in depth, and you can hear little trinkets that he said in there that were very, very useful. This is the one that when everybody watched it, if we had more time tonight, I would play it, but it's 17 minutes long. It's 50 years of the O'Neill companies, and it shows you a lot. He started the printing company because he needed to print the charts. And we used to have the chart books that were printed out. Well, now, of course, everything's digital, it's online. It's a fascinating look at how he has evolved, how the company's evolved, and they've been around 50 years. It's very, very, very interesting. So here, just take a picture of this, and you can go take a look at it. Or you can just do a Google search, 50 years of Bill O'Neill with David Ryan and Mike Webster.
The recording will be given to everyone a few days after this meeting.
Okay, great. Lessons from the master. This is from Bill. I think if you put this into your watch list and into how you choose stocks and which ones you choose, you may not have a 400 to 500 increase in volume on every single stock you buy. Okay, you may not, all right? But if you do, and you find one, it's usually a big winner. You can go take a look at Peloton, go take a look at Zoom, go take a look at winners from the past. And I'm going to show you some examples. We're going to fish in the CanSim pool, in the IBD lists. And you want to use this early in a stock's move. Like we had the coronavirus sell-off, we got this new uptrend. Now we're hunting for stocks. This is the area you want to hunt in right here. And then we want to talk about just not volume. What does that mean? An increase in volume. So what? Well, dollar volume. So the way we calculate this, if there's a total number, 100,000 shares, and it's $5 in price, your dollar volume is $500,000. Now we're going to see how this plays into, we want to play in the $1 billion club. That's the club that all these, again, we're going to take a look at the FANG stocks when the COVID rally came up. Look for this. Now, after your stock breaks out, look for several weeks of 100% or greater than average daily and weekly volume. Bill would emphasize this. Is there more buying power going into it? Is there more and more? This is something that's very secondary. I bet no one has even noticed this unless Fred showed this one time when he was with you guys. But this is the markets page in IBD. And these little letters down here, I bet people have looked at this page over and over again and probably never even noticed these little letters. These are the stocks being accumulated or bought or distribution being sold. Now, if the A's and the B's are over 60%, it could mean that we're going to get a correction, but it can stay elevated for some time. Now, we had heavy selling September 3rd, and then I took a snapshot here 3 weeks afterwards. These numbers dropped a lot. It can pull back on you. It means that there's no stocks with an A accumulation. In other words, there's not a breadth of stocks that are being bought heavily by the institutions. The number of A's and B's went back up, though. We had a follow through day here, September 30th on the Dow, October the 12th on the NASDAQ, and we popped back up again. I'll show you how we're going to use this tool just a minute. We had a follow through day November 4th, and here was our numbers of the accumulation stocks. So how do we use this little device here? This is not, you're just going to glance at this. It's there's not a formula for using this, but generally here's the deal. When the A's and the B's are at a really elevated number, the market may be topping out. Everything's being bought and bought and bought and bought. It might be ready to correct. But remember, this is going to stay high in a roaring bull market. On the other side, if we have a bunch of D's and E's and, everything's being sold off, we may be getting ready to have a follow through day. But, a raging bear market, if it lasts for a long time, can drag those stocks down and hold them down. So that's the little A's and B's. This is a Fred, something that Fred uses. Bill put it in the paper. This is a Bill addition to the paper, but I have never once heard Bill talk about it, which I find fascinating. But Fred paid much more attention to it. So very interesting differences between the two guys. The simple timing indicators, this is when the 8-day moving average is above the 20-day, you're long. If the 8-day goes below the 20, you're short or you're in cash. Now, Fred learned this. He worked with a guy named Ernie Zahn, and they had a pencil and a Frieden calculator, and they would post this on a graph. And the moving average crossovers, this has been used by Wall Street pros going back to like 1910. So it's very simple. Here's the COVID, the sell-off right here. Here's your 8-day in green. The 20-day is in purple. When the 8 crosses below the 20, you need to be in cash, or you can short, depends on, you have to know a little bit more about the market. We have the follow-through day here, and we have the 8 crossing above the 20 right here. It was a little bit afterwards. What you want is this 8-day nice and smooth above the 20. This is where it's really easy to invest. Another thing I want to mention about the follow-through day here, the stronger the follow-through day, the better. The NASDAQ moved up. It had a 7% move off the bottom. That's massive, for an index to go up 7%. So that's something to look forward to for a successful follow-through day. Now, here we have the simple timing indicator, September 11th. So we had the sell-off here. This was September 3rd and 4th. The 8-day went below the 20, right there. Now, you don't have to wait for that to cross over. You might have thought this was a sharp pullback, but it was an indication that things were, that the market was weakening. So when that happens, be very careful. The 8 is about to cross to the positive, but these last 2 days, we had strength in the Dow, but the NASDAQ has struggled because we had the tech sell-off. So the 8 is about to just trying to cross over to the 20, but keep an eye on this right here. If this doesn't work, and if the NASDAQ continues to sell off, then just be a little careful. The big picture column, I hope everybody's reading it in Investors Business Daily every day. It just said stocks fade. We got this coronavirus news. The thing here is there's a rotation right now starting. We're rotating, at least right now, the indication is we're rotating out of some of the names that were big names in the COVID rally. So we'll just have to see the rest of this week how this goes. Economic indicators, I'm not going to spend a lot of time on this, but I did note, this is the Baltic Dry Index. You want shipping, to be taking up. Here was the corona problems, sold off, rough time over here, not a lot of shipping. We were looking pretty good as we had, the follow-through day was in April, and we got a real uptick in the Baltic Index. Other economic indicators, there's a few that I might check on. You can add as many or as little of these as you want. The strength of the dollar, the UUP, you can look up a chart. A stronger dollar is usually bad for the market. Our goods and services are more expensive to export and all that kind of stuff. Look at the financial names. These did not rally with the COVID rally. They normally do. We should have them in good shape. The semiconductors should be rallying. Gold is sometimes a flight to safety, but it did participate in the COVID rally. We've got copper that's used in technology and building, and then we've got silver. This is something interesting. You can look at this on stockcharts.com. It's free. I just want to see, here's April the 6th, we had a follow-through day. Are more and more and more stocks trading above the 50-day? And in this case, they were. And in the S&P, the same thing. The S&P did not lead as much as the NASDAQ did because those tech names were making big runs. Okay, how can we tell if we may be ready to have a follow-through day and a new bull market or a new uptrend? Now, this is typically going to happen after you have a bloodbath. This was the 2000-2003 bear market. I almost canceled my IBD. My husband said, why do you keep getting the paper? Okay, somebody got creamed at the top. It's 500 million shares somebody bought way up here. And then the market fell over. So how did we know down here? Can anybody see something? I wish I could be in person with you guys. What is in this chart that would tell us that we might be getting ready to have a follow-through day? Well, I've pointed to it right here. Massive volume on the bottom. 262 million shares traded 2 weeks in a row. Money was piling back into Yahoo. And then over here, 227 million shares traded. And this was on the follow-through day. Now, this told you the big...
Blue days in red.
Pardon me? Yeah, so this shows the importance of the follow-through day. But if you could see huge volume going in, and it went into all of those big names before the COVID rally, and I'm going to show you, they piled into Zoom, they piled into Peloton on the bottom. Very interesting. Make sure to pay attention to that. Baidu, this is prior to the 2009 new bull market, and we had massive volume here and here and here. Just massive numbers of shares traded. This is before the market took off over here. They were getting, the institutions will get in before we do. And that's fine. We want them to lead the way and show us through volume that they're entering the market. With Apple, okay, this is before, this is a little bit after the follow-through day in March of 2000, excuse me, yeah, March in 2003. In June, huge money went into Apple. 193 million shares traded. Confirmation that the follow-through day is going to work. Netflix, the same thing, 2009, had a big week right here. So go look at some model stocks. Go look at your MarketSmith top stock book each year. Just go look and study the big winners. You will see, before we had a follow-through day, that many times you'll get this massive volume move. Microsoft had a big volume move. Someone came in to support it right here, but the COVID, this is the S&P, the COVID crash pulled Microsoft down with it. Now the bulls and bears were fighting it out here. Red weeks, blue weeks, red week, blue week. So they were going back and forth until Microsoft finally took off again. The 10-month line. I want to introduce this if you're not using it. We're not going to use the 10-month line, for our day-to-day. It's too slow. I mean, to get out or get in. But there are periods of time in the market. If you back yourself up and you're staying above the line on the 10-month, you're making these nice smooth moves. It's easier to stay in the market knowing you're in a longer-term trend here. This was a longer-term downtrend. 2000, 2003, you just pretty much stayed below the 10-month line. Now, Kenny Polcari was on CNBC. You guys might know him. He's funny, energetic. He's not anymore. He came on the Matt and Amy show, and he was telling us that the floor traders and everybody in New York, they use the 10-month line. It's a longer term line that the money managers use. So here it is from 1973 to 1990. And again, you'll just get these longer term either pullbacks or uptrends. I will say one thing from looking at this and monitoring this. If you go below the 10-month line, it takes a while to turn the bus around. You usually don't turn around after just one down month and go back again. I'm doing work right now on the level 2 and the cyclical and secular bulls and bears. So it's kind of an interesting thing to study. So where are we right now? Well, here's the NASDAQ. Now you can see on this, this was the COVID sell-off. And we came down for 2 months and then we turned around. This was a fast sell-off, fastest one in history. And now we're still above the line. So it's just another little place to go look to see how we're doing. If you're interested, Kenny writes daily market musings. He's funny. He's all can slim, except he buys probably a little bit earlier than any of us would. And he was an institutional buyer. Now he works for a different group of investors. And then he feeds you. At the end of his daily musings, he's got a recipe. I thought what he said in September in September and October, he said, be careful. These are volatile months. And this is where you would access his morning thoughts if you want to take a picture of that. Here's another really good, useful resource. This is Trader Lion. Just go to traderlion.com. His name is Ross Haber. He was a former portfolio manager for Bill, and he has free weekly market reviews. They're quite good. He's a very nice guy. I met him, I think it was at a workshop in Cincinnati. It is where he was living at the time, and anyway, just a heck of a nice guy. And I think that it's CanSlim. The analysis is the same, and he has a couple of model stocks marked up from 2018 to 2019. So there's another useful little fun tip for you to go to. Macro trends. Now, I love MarketSmith. I use MarketSmith, but there's some things I can't get. If I want to go back 100 years for the market indexes, I can do it on this macro trend site. There's all kinds of commodity. There's just all kinds of information. So here's the stock by sectors. And these are what we invest in. These are the groups. I think it's interesting to see, how many stocks are in each group and sort of their market cap. This was interesting. If we get into a real fear, a place of great fear, then obviously gold will take off. But I just wanted to encourage all of us as investors that over time, stocks have done much better than gold. And so that's good for us to remind ourselves. Now, we're all hunting for the elephants. And the elephants were what Bill O'Neill and Fred Richards sort of taught me to hunt for the elephants. And they make themselves known by the billions of dollars in them. And we all know these names: Tesla, Apple, Amazon. You guys know these names. And so this is just interesting. We're hunting for the elephants. And why are they elephants? They're doing something that we are using, a product that we're using, a useful service, something innovative, like Zoom and Peloton, certainly. Tesla, electric car, Apple. Tim Cook said something today. He said, next year is going to be very interesting. There was something like that. So they've got something up their sleeve. I don't know what, but I will find out next year. Here we have the 1-year change. And I'd like to review this. Did any of us miss these stocks? These are all names that we know, and the gains that they made in a year. And go back and see, should you have been in Tesla? Should you have been in Apple at some point? Amazon? These are stocks that are not CanSlim stocks, but I just want to show them because it's kind of interesting to see what made a big move and why, the drug companies, a biomedical stock, those, of course, shoot up like crazy. Okay, hunting for the elephants. Just take a look at the sales growth, 5 years for Amazon. The earnings per share, of course, we know that's always been problematic. I am a stickler on my MarketSmith for looking for earnings surprises. It almost always means it's good for a company, unless they give like a week forward-looking guidance or something like that. When someone beats what the market is expecting, what the Wall Street pros are expecting, that earnings surprise number, time and again, it makes these stocks go higher. Mike Webster was on the IBD Live, former portfolio manager for Bill. If you go to, a guy started this website, which I think it's wonderful. It's called playthetrade.com. And all of the stuff that Mike, when he was down at IBD, he was only there about 10 months, I think. But, how does he do post-analysis, MarketSmith screens? How does he use Thinkorswim? All kinds of articles, archives back here. So go take a look at that. It's playthetrade.com. Wolfram Alpha will show you the earnings that are going up. Now, this was over the last 10 years. There's a reason why I want to show this period. Fred Richards invested in Tractor Supply. And with this, earnings kept going up and up and up over 10 years. Now, Fred bought it back in 2001, but Fred is a farmer, okay? He does many things. He's not only a farmer, but he owns land all over the place, and he's got corn and he's got soybeans and all kinds of stuff. So he knew this company. This is the do-it-yourself farmer. You know, you go into Tractor Supply, but he held this for years. Now, I would not have. Look, this is a lot of dead money for many years, but he did. He had a lot of money in it. He still owns some. And, you know, eventually this is a huge winner for him. So what would keep you in a stock for years? Is there anything that would keep you in a stock for years? If you want to download and save material, this is a way to do it. It's called the HT Track. So if you have stuff you need to download from a certain website. The IBD stock screener. Okay. If you click on this is on investors.com. Click on each of our lists. IBD 50. How are they doing? And I can tell by glancing, and on a good day, oh, look, our IBD stocks are going up. Here's the IBD 50 stocks going up. How about if I want to see how the sector leaders are doing? I can see, well, who's moving today? It's just a real quick glance to see how some of them are doing. But you can do the same thing with the IPO leaders, stock spotlight. You can click on stocks making new highs, which is kind of good to see how some stocks are doing. So it's something good. I don't think enough people are using it. Okay, I thought I'd like to show you the performance, and I'll just let you look at it for a second. Now you can see here that the sector leaders are always the best performers. So pay attention to that list. All of our lists are good, but the sector leaders is really strong. A relative strength at new high. Run this. Now, if you have MarketSmith, the charting service, you can run it there, but you can run these in this IBD screener. It's our job to see, you know, what stocks are showing the most strength in the current market. This is really great in a new uptrend because you want to see the first names that are moving out of the gate. And in a correction, it's a good place to see, well, what is holding up right now? Stocks on the move. If you guys have, I hope maybe you've gotten into the new investors.com, and I think it's been a nice improvement. I think they did a good job with it. So now what on the stocks on the move, if you scroll here, it will pull up a chart and it will give you the composite rating and the earnings and all this. Just if you scroll over the ticker, if I go down here, I can see what this one looks like. I always look here up in price and down in price every day. I do a lot of stuff in MarketSmith, but I always look at this every day just to stay in step with what, I want to make sure I'm not missing something that's on the move. Okay, and the MarketSmith videos, some of them are open even if you don't get MarketSmith. So go to marketsmith.com and choose a topic: investing, chart analysis, you know, the current market, what the current market is doing. They're not all open. Some of them you need to be a subscriber, but there are tons and tons of great webinars. And if you are a MarketSmith subscriber, I really recommend that you make use of this because there's a lot of great stuff here. The IBD webinars, go under the video tab on investors.com. There are dozens and dozens. And anything you could think of: when to buy, when to sell, chart reading, how to find home run stocks, anything you could possibly know. Matt and I do these bi-weekly webinars for beginners. I think this is way too beginning for most of you guys. So, but if you're new, if you're really brand new and you want to know how to use our website or how to use our charts or tools, you can look at that. This is the IBD Twitter and influencer list. And we've made, we really kind of joined back into the whole social media thing. We were not active for a while, but we've really made a lot of little partnerships with people. We do a lot of webinars with some of these folks. They follow our CanSum philosophy, maybe not completely, but they're very similar to CanSum. Okay, the earnings acceleration. Now, this is not 100%, but this is very useful in the beginning of a new rally. So when you have the acceleration of an earnings surprise, they surprise Wall Street again, and bigger. Wow, this company is really knocking the socks off of Wall Street. Their surprises are accelerating. In stock checkup, you can just get the last quarter of an earnings surprise, but that's a huge one. Okay, let's take a look at a daily chart. Now, what made this stock? It was kind of tight, and it comes here and forms a cup. Now, the earnings went from 0 to 133% right here, and then they jumped up to 425%. Now, triple-digit earnings are something to look for in big winners. Now, as you get up to the end, up at the top, sometimes those triple-digit earnings do not propel a stock forward, but in the beginning, down here, they do. Here's your earnings move on big volume. You move up day after day after day. You rest a little bit. You have the 8x20 crossover that Fred was talking, and probably the power of 3, which is the 8, the 20, and the 50 day, which is in red here. Volume was 221% above average. Kind of a nice tight little cup here. So this one ran up, and this was a good COVID winner. Let me turn on the light here. Okay, this is a weekly chart. So what happens here is the stock was up 20 to 30% in 2 to 3 weeks. Well, that means that this is the 8-week hold rule. So if a stock goes up that much in a short period of time, 2 to 3 weeks, IBD has a rule that we hold it for 8. Well, how did that work out? It worked out well. Only use this hold thing in a new uptrend, not at the end of a run. Look at the blue bars on the weekly chart on the way up blue. Look at that little blue. It's all blue, 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 blue. There was a jump in fund ownership here. We knew more and more funds were getting into it. This was in a strong group. It was in a group with Zoom. This one, apps, went all of these stocks. It was in a very strong group. So take a look at that too. Also, this is a newer IPO. We find that many of our big winners are newer IPOs in the last, 5 years or so. A lot of strong funds were in it. So this is a Market Smith. You pull this up. These are funds that were performing very well in the current market, and a lot of them owned bandwidth. So that's another very strong sign. Datadog. Okay. This was back, I took the snapshot of this back in September, but you had an acceleration of your earnings surprise. Now, that didn't do anything to the stock here or here at all. It was just moving sideways. Over here, we got a cup-shaped base. Now it blasts up. It's a first stage base, tight on the right side of the base over here. It moves up. There were 24 million shares traded on a strong earnings report. Their quarterly earnings went from 150 to 400. That is a huge jump on Datadog. Now, I make note of volume. I'm sort of known around IBD as the volume queen. Now, we move up here. Now, you get some selling. You see this red selling? All right, and then you move up a little bit more, but then it gets hit with more selling, okay? And we had an earnings report here, and this was not a good reaction to the earnings. And so we know to be very careful going into earnings. If you don't have a cushion, you want to be very careful. Maybe you want to sell half of your position and see how it goes, because anything can happen. This was a good earnings report, and then over here, not so good. Here's Datadog on a weekly chart. Now, here's where I want us all. I've started to really use this, our weekly volume, okay? It runs up 48% here. We also have the 8-week hold rule, but at the very top of this 8-week hold rule, it tops out up there. It starts forming another base. So you have to know what your sell rules are and how long you're going to hold. This is the key right here. On the bottom, you've got 18 million, 12 million, 14 million, 12 million, 9 million, 18 million, 68 million shares as it pops up here. This is your volume early discovery. This is your weekly volume on the bottom. You see, here's the COVID sell-off. The institutions were buying right there on the bottom, and they kept buying week after week. That's how we know that this follow-through day was going to work. Volume on the bottom on the weekly charts, and look for the institutional buying in there. Livongo. This was another one that had earnings surprises. They kept surprising Wall Street. This was the chronic health done remotely. Perfect for a COVID environment. Now, Livongo has merged with Teladoc recently. Teladoc went down again because we think if we're going to get a virus, are people going to start going out to the doctor again instead of staying home and seeing someone on a video? Anyway, but you had an earnings surprise acceleration. This is so tight. Look at how nice and tight this is. And then, we have earnings here. And again, it's the same thing. Earnings gets this thing going. And we have more of a heavy volume here. It was tight around that 50-day prior to the breakout. There was a lot of funds that had triple-digit earnings and sales. These triple-digit numbers work. Now, again, when you get this heavy volume selling up here, what are your rules? And then eventually this, it pulled back quite a bit, and then the two companies were merged. Here's Livongo as opposed to the daily. Here we got it on the weekly. And again, I would just tell you to just notice that volume off the bottom. That will help you a lot. It hugged the 10-week line. That's just a nice move. Sometimes if a stock is selling off on a daily, if you back up to the weekly chart, it may help you stay into a winner. And also look at how vertical this was. Some of the biggest winners in the past have had that. Chegg. Okay, here's one. They had an earnings surprise acceleration. It had huge earnings report here. Huge move here. It digested the gains for a while, and then it moved up, and this stock has been struggling lately. But it had many quarters of earnings surprises. This is from Yahoo Finance. Okay, we have a rule at IBD that's taught in the level 4 workshops. If a stock is 100% over the 200-day, it's a sell warning. Now, it does not always work, but you should still make note of it. So here, right, in this section here, Tesla was 108% above the 200-day. It's just starting to get, it's starting to, really accelerate really fast. But then Tesla went up to 190% above the 200-day. That's a big spread. And of course, Tesla has pulled back. Zoom also up 191% above the 200-day, and this stock also has pulled back. It can be an early indication that the stock is getting a little bit overheated. DocuSign also 122% above the 200-day. So just kind of make a note of it if you're going through your MarketSmith charts. It's a good thing to make note of. Okay. There's lots of websites. Some of them tilt more conservatively and some of them tilt more liberally. And I want to make sure that I'm getting the news. And you have to really sift through some of it. Even though we're investigating companies, you're getting someone's opinion. So I'll go to several different places, and I'm not going to comment on thisisinvestors.com. I won't make any comments, but we know what to expect from certain sites. It's going to be tilted a little bit differently. So make sure, Bill always told us to make sure we were getting news from different places, to make sure we were getting the real story. Finviz.com is free. You can do this on your brokerage service, obviously, but they have earnings before the open, after the close. They have the volume screener. They have news charts. There's all kinds of back testing you can do on here. It's an interesting site. Free stock charts. The only reason I put this one up, I don't know how many of you get the Jerry Samet nightly write-ups. You will get these. It's only one paragraph, but he does a really good job. He has decades of experience in the market. He used to be a money manager. If you join Silicon Beach, IBD Meetup, or Pasadena, you will automatically receive the reports. I also use this site. If Jerry Samet talks about the Kopic curve right here, this is the Kopic and it indicates a market. Something I don't go crazy on this site. It's just something interesting. But this is what his nightly write-up looks like, and it's very, very well done. So if you want to join it, if you want to get these every night, just join the Silicon Beach or Pasadena meetup. Okay, we talked a little bit about volume explosion. There's an implosion and an explosion. And so what are your expectations? Well, Snapchat, 109 million shares were traded. So when you see this happen, what is your expectation? That it's going to go a whole lot lower. Now, right on the bottom, right there, 53 million shares go into this thing, and you're going to expect it to go up, and it does. Then the stock goes up 36%. Volume was 434% above average. This was on an earnings report, and they were doing better with their subscribers, with the people using Snapchat. I was in the office today working with a couple of younger people, they're new hires for IBD, and they're on Snapchat. Now, I'm not, but I don't think I'm the target audience for Snapchat, but you have to talk to different age groups because they are using it. And so that's interesting. So it went up here, and then you've got look at the volume. Amy is the volume queen. And your expectation here is that at least for a while, it's going to maybe form a base, but it's probably not going to go up if you see that kind of a sell-off. So this was Snapchat at the end of the day yesterday, and today it fell a little bit more. So, this is one that it did well in the COVID, the COVID rally, but it fell some today. Twilio, what do we do when we don't have a base? We didn't really have a base, a cup with handle, a double bottom. We didn't have anything here. But you know what? I still think you can play these if it's a CanSlim stock, if the breakout is above the 50-day, and if it has an earnings move like this. This is Twilio. Look how many shares were traded. And you have that 8x20 crossover in your as it moves up here. So, but then again, the story is the same. We've got to look at our charts because we got hit with some selling, and then the stock falls down some. Peloton screamed and screamed and screamed at us. I'm going to be a major winner. I'm going to be a big winner. It was a newer IPO. This had been very tight. Earnings were right here. 52 million shares were traded. That was an indication that this was going to be a monster winner. So how much did that mean? Well, there's a free dollar volume calculator. That means you can also do this in your head or on your calculator or whatever, but $2.3 billion went into Peloton that one day, just that one day. Somebody wanted shares of the stock, and probably many, many institutions were doing that. So now the stock at this, when I took the screen capture, it was 105% above the 200-day, and it had an earnings surprise. It had a really good report. The sales went from 66 up to 172, but it was up 12% after hours, but then it pulled back. Now, are you nervous here? You see some red selling. Are you really not that far? You're still way above the 50 here. What are you thinking right here? If you're thinking about that, go to the weekly chart. On the weekly chart, way above the line, still looking strong, and it closed blue in the week that we were worried about. But you should make a note. Some institutional money came off the table on that earnings report there. How much came off the table? Well, $7.3 billion came off the table. You see, that's a lot. Now, the stock continued to go higher, but just make a note of that and keep watching it. Early discovery. This is the thing. Where's that professional money? Where is it coming in? Where's the weekly volume explosion? Right off the bottom. And you guys can read, so I don't need to rattle these off, but this is all of the weeks that I counted. I'm counting up here. 53 million shares, 24, 43, 49. I mean, look at that. That's unbelievable. Look how many blue weeks you have. Very few pink weeks, right? And you don't lose that much ground when you have a pink week. So this was early discovery of Peloton. That's that that weekly explosion off of the bottom. And now it's Peloton today. What happened today? It fell off because this was a COVID stock and we've been staying at home. And now we're going to have a virus and everybody's going to be going out and partying, even though we know that's not going to happen right away. They made a deal with Beyonce. And Beyonce is going to make, she's been a fan of Peloton for way before COVID. She's going to write original music because her songs are among the most popular used on Peloton. Tupperware. This is a turnaround story, not a great CanSim stock, but I wanted to show you that the stock moves on this big earnings. This is your volume explosion. It's something to look for in every single breakout. Now, this was Tupperware at the end of the close yesterday, so I guess we're going to be going out to eat more, and so therefore the stock was one of the basket of stocks that sold off. There were many. PayPal. This was a great COVID play that forms a nice little cup, volume on the breakout, and we're good to go. Now, pulls back to the 50. I just mentioned here, what are your sell rules? If you're holding the 50, are you in it? If you break the 50, are you selling it? Just make sure you have your sell rules in place. Now, here, PayPal does go below the 10-week line. So are you a long-term holder? Are you thinking it's going to form a base here? It depends on how early you are in the move. But what are your rules and how long are you going to hold it? Some of these get volatile. You know, you've got a good earnings report here, and I'm sorry, earnings were over here, but you get big volume, but this crashes on big volume. So you just have to be a little nimble and flexible sometimes with some of these names. Facebook. Okay, we had the COVID sell-off, and now we've got this volume on the bottom here. Look at this. We had 46 and then 50 million shares traded. And now that was a volume explosion. So with the FANG stocks, did everybody get back in them with the COVID rally? Here's going to be a tricky thing. All of the FANG stocks, typically, when they recover the 200-day, historically, that's been a good time. But now, will that continue into the future, or are we definitely going to see rotation out of these names, out of these big tech names? Here's Amazon. And again, as we got going with the COVID rally, there were 12 million shares traded right here. The stock breaks out of a nice little cup-shaped base right here. Here's Square. 31 million shares traded here. Again, not really a base pattern here, but it works. Use the power from the pivot in MarketSmith. It will show you past volume explosions. HZNP is one. Also just run an up on volume screen to see these volume explosions the day that they're happening. Okay, this is probably the most important slide that I have to share. After the follow-through day, April the 6th, until we got that big sell-off that I just said till September 3rd. I just wanted to have a date, a line in the sand where I took these gains from. If you followed a volume explosion in all of these stocks, this is the gains you would have made in these names. But what does it mean when Amazon had 12 million shares traded? That was $28 billion. Peloton, 53 million shares were traded. That was $2.3 billion. Tupperware had 688 million shares. Twilio had $5.3 billion going into it. These are on these volume explosions. PayPal had $5.2 billion going into it. GSX had $1.4 billion. Facebook had these several days here that equaled $38 billion. 38 billion. And Square had $2 billion going into it. So my question is, are we playing in the billionaire club? This is dollar volume. How much money is going into these? And this is the length of time that this took. Past volume explosions, here's NVIDIA off the bottom, 73 million shares. Here, another volume explosion, 119 million shares. Square, here we had 43 million shares, and over here, these volume explosions on earnings. This is not this was in the MarketSmith Top Stocks book. Did not really come out of a proper base, but what I want to emphasize here is this week over week of volume explosions. These are the stocks that make these massive moves. This stock was up 1,600% in 30 weeks. This was a big winner from 2018. Off the bottom, these are the millions of shares that were traded week after week after week. I mean, they're just pouring money, diabetes care, pouring money into this stock. Hardly any down weeks. These are mostly all blue weeks. Okay, we have to have a little bit of fun. What do Picasso, Monet, and beached whales have in common with stocks? And don't worry, this whale was rescued. These guys right here are getting ready to rescue it. Well, Picasso charts are wild and all over the place, and we want to avoid those. The Monets are cloudy. It wants to go up, it wants to go down, it doesn't know what it wants to do. It's cloudy, so we're going to avoid those type of charts. And the beached whale is just not going anywhere, just going sideways. We want to avoid those. Okay, if you trade the TQQs, I think that's fine for those of you that play the ETFs, but be careful about this. This came down 30% in 2 days. This is the triple. So if you're newer, don't use these. Use the single leverage. You don't use the leverage ETFs. However, from the follow through day, you got a 261% gain. So it is worth using if you have to make sure we're in a strong uptrend, not in a choppy market. Just use that if we have a very strong follow through day. There is a documentary called Free Solo, and this guy climbed up the granite wall in Yosemite, El Capitan. Now, he did it without a rope, but he had climbed it many, many times with a rope and trained. So what is our investing plan? Do we have a plan? Because he planned every hold of his hands. As he before he did this, he knew the cracks were there. He knew where his legs were going to be placed. He did this over and over in his head. It was almost like a savant, and he did it. Now he's kind of crazy. The hardest place is right here. It's when you're in the sideways moves. Being in the sideways move of the stock market can be a tricky place. But anyway, I thought that was kind of interesting. Do you have your investing plan? This is a book I wish we could locate. If someone could find it, that'd be great. So Bill O'Neill studied Jesse Livermore, Bernard Baruch, Nicholas Darvas, and others. But he also learned a lot when he was at Hayden Stone as a young stockbroker. If you can find it, it's supposed to be really great. It's the story of Hayden Stone. We're going back now. This is the story of this company. It was 1892 to 1958. Afterwards, it became part of Shearson American Express in 1981. So study those volume explosions as you guys go through your meetup clubs and the AAII. Look for these names that are just exploding with volume. Also, we want, the highest earnings we can, earning surprises, and use this in a new uptrend when you're looking for these big names. And then I just put this in here because I do silly little cooking contests, but it's good to have another side habit because I know some of us are in front of our screens all the time on the market. So I try to get away once in a while and just try to go outside. I'm sure you guys are able to get outside where you are easier than we are right now, but we drove up to Mammoth. So find a way to kind of feed your soul, something that's beneficial to you, take a walk outside. And then finally, the best advice from these two wonderful men. I'm so lucky to have known them. This is Bill. Volume is your best measure of supply and demand. Institutional sponsorship. Volume, 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 volume. It's in every single thing Bill writes. And then Fred says, it's really simple. Buy stocks with increasing sales, profits, and a positive cash flow. And there you have it. Are you there, Cookie?
I am.
Okay.
I am in awe here. I took so many notes, but for those people who couldn't write real fast and take pictures of everything, not to worry because this session was recorded. It will be edited and it will be sent to all the people who attended today. It may take a few days for that to happen, but I think that's really wonderful for AAII to do this for our members, and certainly for all the IBD members who are here today. I welcome you. We thank you for being here. There are a lot of questions that went into the chat, and in a few minutes, we'll look at them. We were very lucky because AAII was going to do a seminar here just a few weeks ago in October, and that was canceled, but it was rescheduled for next year. So we'll be looking forward to that in the coming time. And for the AAII next chapter, a meeting, we will be having Daniel Kimball from the No Load Fund X, and that will be a seminar on January 25th of 2021. So that's just some little things I wanted to tell you. I apologize profusely for, things not starting right on time, but please stay by here because I'm sure you want to listen to the questions that have been taken down, and Francisco will ably handle them. Francisco, are you there?
Yes, I'm here. I unfortunately got disconnected. The only question I'm looking at the chat, Loris Ciano was asking, can you show tech report slide again?
I'm sure which one?
Tech report slide. I'm not sure either which slide she's referring to. Or...
Oh, you know what? So instead of me going back through my slides, why don't they'll get the recording of it and she can just flip through the recording and find it.
So, Cookie, I don't see the previous chat questions.
Okay, well, if people didn't put their questions in chat, then if they have a question, they can unmute themselves and they can ask the question. Somebody can step over here. Go ahead.
Yeah, he shows some links, but is it possible to get those links in like a Word file or PowerPoint or something?
Well, had I been really, really smart, I would have put them all on one page and then you could take a picture of that one page. You know what, when you get the recording of it, just go through and
I can ask them, when we go through the recording and they're going to make some changes to it, I'll ask them to take all those links and see if they can put it on one page.
Yeah, that's a good idea.
Possible, but I'll ask.
What I'm saying is like a very lengthy links. So if it is a hard link, you can just click and then you can go there. It's okay.
Right.
Okay.
You know what I mean?
Yes, and if you are really desperate to get to those sites, when you watch the recording, you simply do a Google search and you will find them. They're not difficult to find with the information that Amy's giving us. But yeah, as Cookie say, there will be a request to the editors of the video to get the links.
I have a question. The other day, David Chung said that he would not buy a stock unless it had both earnings and also had sales. And then he said, after looking at IPOs and whatnot, he has changed his way of thinking, and he would buy a stock that had sales and not earnings because you have to have the sales before you have the earnings. So as long as they're having a real good product with increasing sales, then the earnings per share will come. Your thoughts?
Yes, I agree with that totally. We have had a few stocks that got going, like Shopify, Twilio, I think was another one. There were some that did not have the earnings as you said in the beginning. But yeah, if you have strong sales, they're obviously selling their product. And after they sell their product, then the earnings should come.
Mm-hmm.
Okay, I have one question, Amy. For the gap downs, like they happened this week, suddenly unexpected, but seeing news that hopefully they work, right? But how you handle that kind of, let's say you have 2-3 stocks in your portfolio that gap down like that, more than 15% each.
Yeah, you say more than how much?
More than 10-15%.
You know what, you got to get out. You just got to get out. You know, we could play the hopium that we hope that they go back up. We would hope that Zoom would go back up, but it looked even worse today. And when there's something happen, and you know, most of the time, this is a very, very, very unusual thing to happen. My MarketSmith screens before these last 2 days, I mean, they were going ping, 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 ping. There were so many things breaking out. It was crazy. But you know, this news, this kind of virus that we've had is just on something unusual, and so we have unusual news to go with it, and it turned the bus around very quickly. So I would just sell. If your stocks are really gapping down badly, you need to get out of them.
I think the election is probably still unsettled at this point in time, and I think that's contributing to it as well.
Oh,
Good. Any other questions for Amy?
yeah.
I saw
Amy,
a question that I guess was not on your screen, Francisco, from Natalia. She says, the 8 and 20 crossover does not always work. Where do you put your stop? Question mark. Minus 8%?
Oh, okay. So the 8x20 cross, I use this. This is like a secondary type of thing, right? It's not a major an indicator that I'm going to use to. It will show me strength in a stock. It will show me strength in an index, or it'll show me weakness. And so it's a secondary thing to look at. It's not a primary reason for buying a stock. My primary reason for buying a stock is it's shooting up on strong earnings, and everyone's got to have the product. They've got to have Zoom. We've got to use Zoom right now. You know, that type of a thing is like, oh yes, of course. You know, I was traveling for IBD several years ago, and the taxi drivers were using that little white device that fit on top of your phone. That square device. So when it's something that's like, gosh, I wish I had invented that. You know, that's a fantastic idea. Just attach it to the phone and swipe a credit card. So something like that is going to be more the reason to buy something. The 8x20 is just another little nugget to look at.
So what do you think about, Amy, what do you think about this rotation? They're talking about tech versus cyclical / value.
Yeah, I tell you what, I'm watching this very, very, very carefully. Obviously, all the stocks that we were all in got dumped. I mean, you know, very few of them. A couple of them are holding up. The only reason Peloton turned around is because of the Beyonce deal.
Yeah.
Today. So, yeah, I think we got to be careful. Let's see if this turns into a real full rotation of stocks. Now, if if Biden wins, if it's all confirmed and not challenged and all that stuff anymore, he wants to do more work on the infrastructure and things like that. So will some of those names begin to pop? It's hard to say right now. I think we're going to see in the next couple of days how serious. I ran into Chris Gessel. He's at IBD. He's one of the top guys. And I saw him in the hallway today, and he's like, yeah, God, what happened the last couple of days? So we're really at IBD kind of just waiting to, let's see through the end of this week. If we really see by the end of this week that these COVID stocks are finished, if we don't turn around, the NASDAQ's been down 2 days in a row, pretty significantly. So we'll have to see. You know, if you look at the contents, you can see it in Investors Business Daily. You can see the top contents that are in the NASDAQ, and the FANG stocks. A lot of them are dragging things down. So we'll just have to wait and see.
Interestingly, the FANG stocks were the ones that went down when we had the pullback in 2018. So
yes.
that led things down. So we'll have to be very careful with those.
Yes, exactly. And then the other question is, are those names going to lead us going forward? Now, they're big companies, they're diversified, they're not just into one thing, but time will tell if those are the leaders or not.
Yeah, sometimes once it's down 20%, then people jump in.
Right. No, that's true. As I was saying, if you look at all the FANG stocks, and I'm not making any prediction, but when they all dump and they go below the 200-day. And every time they come back up of the 200-day, when they come above that on volume, that's when they start taking off again. But let's just see if that happens this time or if things change.
Do you spend any time, especially on a down day, looking at what actually did well that day?
Absolutely.
I think
Absolutely.
that's probably more key than what's going up on a day that the market is up, because you find, what stocks you should still be in when the market's going down.
Yes. In fact, I do that on MarketSmith. I run up on volume. What are the stocks that are doing well, even if the market is tough? And you can take a look at stocks on the move on investors.com. Everyone can access that for free. And you will see stocks on the move, what was moving today. And that'll tell you.
And what about your sell rules and buy rules?
Okay. So, I'm just looking for the Rolls Royce. I'm looking for the top merchandise, the very best earnings and sales that I can. You can see that I like volume. So I'm going to look for great big huge volume. And most of our COVID stocks had all of those great qualities. We had the names that I just mentioned that made some great big runs. And there were other big names that I don't have on the list here that made good runs too. My sell rules, a very easy one. And it's funny, Chris Gessel and we were talking and the same thing. A sharp break of the 50-day moving average on big volume, that's usually for me a sell signal.
Okay.
Amy, there is a question in the chat from Linda. She's asking, given more people comparing today to 2000, isn't it likely that tech downturn becomes a self-fulfilling prophecy?
I'm sorry, say that again. Given the downturn in 2000?
A lot of people are comparing the market today to what happened in the year 2000.
Oh, I see.
The tech downturn becomes something that will happen.
Well, this is always possible. I'm not going to predict. I don't like the current action. I don't like it at all. This is a real bifurcation in the market. When you have the Dow up that much, now that's only 30 stocks.
Right.
And then you have this such a wide difference in what's going on in the big tech arena. Something's going on. It's definitely time to be very careful. I wouldn't say, don't try to buy these stocks that have pulled back, because they might go a whole lot further. On the other hand, if things turn around, I'm not sure the rest of the week. I'm just going to have to take it day by day to see what happens.
Agree.
Good. There is another one from Richard. That what is the cost of MarketSmith?
Oh yeah, it's sure. If anybody wants to try any of the products, you just shoot me an email. It's amy.smith@investors.com, or you can ask Cookie. Cookie knows how to get a hold of me. Yeah, MarketSmith is $149 for 2 months, or $14.99 for a year, and you can cancel it at any time. And it is a fantastic product, and they give you training on it. They have coaches, and it's just excellent. It's a superb product.
Can you repeat your email?
Sorry, Srini. There's a second part to the question about the basic IBD membership to see charts with the basic IBD membership.
Yeah, the basic IBD digital. Oh gosh, I should know this. I think
There's some charts. Yes.
The 1 year price is like a 390 or something.
Yeah, that's for the year. I think that's it. No, it's less than that for a year. But there's trials you can try for a lot less than that. If anybody's interested, send me an email and I'll find out the right pricing for you. I promise. Sorry about that. And
the investor.com, you can, for every stock, you can see some charts. And the website was recently updated, which is really nice. And you can hover your mouse over a particular stock. For example, stocks on the move, and you hover your mouse on it, and you can see the chart, very similar to what you see on the paper. So you can also look at the moving averages and volume and all that.
Yeah, and the digital version gives you everything on investors.com. It also gives you the EIBD, which is the paper. That's the digital version of the paper, which comes out once a week, which has tons and tons of articles in it, which is also really, really full of great information. And any of our stuff, if you try it, you don't like it, you can cancel it, and we refund your, we prorate it for you. So there's really not any risk to trying our IBD stuff, because we're very good about canceling subscriptions if you don't like it.
Okay. The question was about the cost, right?
I'm sorry?
I'm confirming with Srini that his question was answered.
Yeah, I'm asking, can you repeat your email, Amy, please?
Oh, sure. Amy, AMY
Mhm.
.smith
Okay,
at investors.com.
okay, thank you.
Anybody that thinks the price of MarketSmith is too high can probably recoup that on maybe their first or second stock that they buy.
Oh, you know what? Oh, yes.
You get what you pay for, and you get what you don't pay for.
Yes.
MarketSmith is a sensational product. I mean, I just showed you, they give you emails that tell you what is gapping up on earnings. Everything is on your alert panel at the top. So you know each day what stock is breaking out, what stock gapped up on earnings. It's really impossible to miss a great stock.
Are there any other questions?
Yeah, I think Richard's question, it wasn't clear. I'm not following you, Richard. What is your question is about the MarketSmith charts or the charts you can get from IBD website?
So MarketSmith, the charts that I was showing, I use MarketSmith charts. I did not show you the regular IBD charts, but they're very good. So the price that I mentioned to you was for the MarketSmith charts. The digital version is a lot less expensive.
Mhm. If
Amy,
there aren't any other questions, it's probably because you gave such a great presentation.
Aw.
You explain things so easily that people don't have any questions to ask.
I have a question. Amy, whatever you showed, is there any already let's say you have a MarketSmith.
Yep.
Instead of you setting up, is there any pre-charts, like what I'm saying is like a 8x20 or 50-day already exists there, or you have to set it up?
It's so easy. You don't have to set it up. So all you do is you log into MarketSmith. It's all done there for you. All it is you pick a sign in, you sign into MarketSmith, and you're there. It's all the screens that I would show you are all preset. You can make your own screens. You can create anything you want to in MarketSmith, but there's so much of it that's already done. You don't have to download software. You don't have to do anything. It's all ready to go.
Okay. It's so because we are working full time and it's a little bit hard to customize, and we don't have time. So
Right,
Yeah.
right.
There are mobile versions that you can put in your smartphone or your tablet for
Right.
MarketSmith that you can
Okay.
consult.
Yeah, the MarketSmith app is really good. I have it on my phone. You can use it on your iPad, your tablet. If you're at work, my phone. I know when it's a good market day, even if I step away from my screen for a minute, because my phone will go bing, bing, bing. So the alerts come in on your phone. So it's a great product.
Watch First Forecast with Karen Carter tonight.
Uh-oh.
Do you have anything conviction stocks or mutual funds would you like to share, or it's too much to ask?
Well, honestly, right now, I would be really remiss to be talking about, a stock that I really like right now, because we don't really know. We're in a very, when we were coming off of the bottom and the coronavirus, the recovery in the stock market, I mean, there were just lots of stocks that I could have said, this is interesting and this is interesting. DocuSign, we had a couple of new people to IBD, and they used DocuSign to sign their employment agreement with IBD. I mean, there was just There are lots of names that we're doing well, but in this environment right now, we just need to be careful, and we need to see what's going to happen in the next couple of days or weeks.
And Srini, you know, if you want, you can download the prices on the mutual funds every day when you go to investors.com. I will show you how to do that.
Okay, thank you. Great.
Any other questions?
So what are your top 2 or 3 things you use every day? Or one is MarketSmith, IBD, I guess.
Sure. Yeah,
Uh,
so I'm every day up on volume. Every day, if somebody's reporting earnings, you know, we have earnings season, comes around 4 times a year. So I'm looking for that. And then on the weekend, I'm going to go through a lot of our lists, the IBD 50, the Big Cap 20. I'm going to go through the MarketSmith Growth 250. And I'm looking for stocks that are either setting up or that are reporting great earnings and sales, and they have a new product. They've got something that we're all using. And so those are my just really simple parameters, but they work.
Okay, thank you.
I think we're going to call it a day.
Okay.
Anyone that's remaining, I want you to put your hands together for Amy and the great job that she did.
Thank you. Thank you guys very much. You guys have a nice evening. It was nice being kind of with you, but I wish we could be together in person. So thank you, Cookie, and thanks to all you guys. You guys are great.
Oh, you're welcome. You're
Thank
most
you,
welcome.
Amy.
So much.
Thank you.
Thank you.
Thank you.
Great.